Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with news of a flood of new debt about to shore up the Chinese economy again. But first, we start today with news that dairy prices have fallen 3.6% in US dollars and 3.1% in New Zealand dollar terms. Leading them down were big falls for cheese, down 4.7%, and butter, down 8.5%. The Bulwark whole milk powder price was down 2.1%, while skim milk powder was down 1.3%. Today's result will be very unwelcome in the dairy industry because it's adding to a lengthening string of declines, 11 in the past 13 auctions. Prices are now 9% lower than where they were this time last year and 16% below where they were in early May. These sort of falls are placing the 2018-19 payout forecasts at risk already, very early into the new season. Along with Fonterra's trading stumbles, it's not a great outlook at present. Elsewhere, the story today is one of optimism. On Wall Street, the benchmark S&P 500 touched a record high and equalled its longest ever bull run as American equities rose on encouraging earnings reports and hopes that the United States and China could resolve their tariff dispute. Yesterday, the Shanghai Stock Exchange Index ended up 1.3%. One reason might be they are about to juice their economy again by encouraging banks to increase their holdings of local government bonds. The plan is to reduce the official risk weighting of local government bond holdings from 20% to 0, a move that could boost demand for a flood of sales set to hit the market by the end of October. More debt seems to always be China's answer to economic stress. In a sign of change and adaptation, the giant Danish shipping line Maersk has said a newly built container ship is set to leave the Russian port of Vladivostok later this month to sail through the Bering Strait and over the top of Russia en route to St. Petersburg, taking what is known as the Northern Sea Route. If successful, it will save significant time and cost of shipping goods from the Pacific ports to the EU, even possibly challenging the new Silk Road rail routes. US Treasury 10-year yield has bounced back today a little, is now 2.85%, with the US 210 curve still up marginally at 24 basis points, just off its 11-year lows. The Aussie government 10-year is at 2.54%, up 1 basis point, and the Chinese government 10-year is at 3.67%, unchanged. The New Zealand 10-year is at 2.62%, that's up 2 basis points. Gold is up another $5 today at $1,194 an ounce in New York. And US oil prices are again a little firmer, up to $67.50 a barrel. The Brent benchmark is now just on $72.50 a barrel. And the Kiwi dollar is starting today firmer than yesterday at 67 US cents, which is a rise of more than half a cent. On the cross rates, we're up at 90.7 Aussie cents and 57.8 euro cents. That puts the TWI at 70.5 and right at its 4-week average. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.